Hi everybody and welcome to Charts of the Week, where several times a week we go through the charts that we're either looking at or that we're actually in. So Dennis here is just drawing some lines for you here in Penske Automotive Group, and this is a trade that we took a few weeks ago, so we're having a look at the results of that. And as you can see, what he's doing right now is he's doing the risk-reward ratio. Now he's actually choosing a sell short example, which means we make money going down. Let's just keep it at that for now. By the way, this is no kind of strange thing that people in the city do. This is what we do on a daily basis. We make money going up and we make money going down. So Dennis, take us through exactly what it is that you did.
All right, so what we did here, so this is something we share on a weekly basis with our members. So we share possible charts, and this is what you invented, right? The buffalo pattern. And so we're looking for a certain pattern, so at least 3 bounces. So here we have one, here we have another one, and another one. So this is the 4th. So since we didn't see it on the 3rd bounce, because the criteria are 3 bounces, then we did it next time. So it's kind of just rinse and repeat, as long as it does follow this pattern.
Yeah.
So what happened was we saw this candle that sellers were coming back into the market. And it's around the resistance line, which means that it's potentially, the likelihood is, because we're all about probability, so it's about to turn down and we're betting on that it will, because we don't know what's going to happen.
But just in case it doesn't, and this is very important because Dennis just used a word called betting, naughty, because of course we're not betting in that sense, we're not gambling, because what we have is we have a stop loss, which is an electronic order that stops your losses, above here at this point here, so that if it goes against us, we're out at a very, very small loss. So you can see this is our risk, but look at the size of our reward. Well, our reward is 3 times larger than our risk. Now, if that's betting, then we're betting, because that's awesome.
Right, yeah, so what I mean really is we don't know which way it's going to go. But we can't control ourselves. So what happened was, so now what we have done is there's a replay function on this. So what's going to happen is we're going to play out what happened.
Okay.
So let's just do that and see what happens. So as the market then opened, it actually started to come down. All right, There we go. Started to come down, so we're up down in a profit.
Yeah.
So then it consolidated.
And this is just what, last week?
Yeah, exactly. This is.
What did you do at that point here? Because if you went in at around this point here, you would have been in profit, but we let our profits run. We don't come out. Many people make that mistake, right?
Yeah.
They go, oh, profit, It's like, why did you do that? But anyway, so it comes back up, and now we're like, because our stop loss is up here. But did you panic, or what did you do?
Well, emotions is a part of it, unfortunately.
You panicked.
I didn't panic, but emotions definitely got in there, but I didn't do anything because we have rules we follow. So I know that this is what the market does. It goes up and down, not always like we want. What we do want is this. You just do that and then we're out.
Yeah, that would be amazing.
That,
but it doesn't always do that. It does this, right? So you got to be a bit patient.
Exactly. So what then happened was it consolidated for a while, went up there again, but then it started to come down.
Whoa, okay.
All right.
Now, at this point here, people do the opposite, right? Yeah, please, love that. Thank you. So people do the absolute opposite. So they panic here, but when it comes down here, they're like, oh, I need to take my profit, right? Yeah. So did you panic there as well?
I didn't panic in that sense. I actually started to put down my stop loss.
Not in that sense, so in which sense did you panic?
I put down my stop loss at this point to my 2-to-1.
Okay, what does that mean for people?
Oh, that means that, so I'm risking 1. So this is my risk.
So that's 1% that you're risking on your entire portfolio. At this stage, you're 1% in profit, right?
Yes.
2% in profit, 3% in profit.
So I put my stop loss now at my 2-to-1 just to secure some, in case it started to go up, because I don't want to turn a winning trade into a losing trade.
Okay.
So what then happened was it continued down.
Oh, now this is something called a gap, and that's something that occurs when the market closes, and then overnight, in this case, it went down. You can see that little gap between where it closed and where it opened. And what that normally means is that there was some selling going on. People don't know this, that the market is actually open for the institutions when it's not open for us. So here they sold, and so when the market opened, the price was a lot lower, leaving a gap. Now, we know that normal gaps, depending on volume, and there's nothing here to show me that there was any change in volume here at all. So what that basically means is that it is likely that it's going to, what's called, fill the gap. So did you know that?
Well, yes, I did know that, but I think I became a little bit greedy on this one.
And that's the emotion, and this is somebody who's been trading for almost 4 years. But it's totally normal to see this, especially where, okay, this is the chart, so you don't get so emotional. But when you actually have a look at his account, there's money in play, right? It's all going green, and there's money, £1,000, £2,000, £3,000. You start getting emotional. So you got a little bit emotional. It's fine, you're human. That just proves that he's human, which is good.
Yeah, that is good. So, but what I did, I lowered my stop loss a bit more.
So you had your stop loss, you put it down to around here, so you lowered it even more.
Exactly.
Okay, so where did you put it? Where did you put it?
The gap.
Oh, that's interesting. Why did you put it there? Why didn't you put it just there?
Yeah, I could have done that, but I put it just above where it went down, and just because I wanted to leave it a little bit of room in case it moved a little bit.
Give it room to move.
Yes, but then so if it kind of retested the top of the gap again and then broke lower, kind of wished for it to do that, right? But what happened was...
Let's see what happens. Yeah.
Yeah. So what happened was, day after, it spiked up and it did retest, but
it
then
filled the gap, and then carried on going up. And the reason, by the way, is because this is a horizontal buffalo. There's clear support, boing, 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 boing. That's the technical term is boing. And because it then boing, everyone's watching this, right? They're watching the retesting of that support line, so everybody piles in at the same time, and it becomes a self-fulfilling prophecy. So generally, especially with the horizontal as opposed to some kind of a wedge or descending triangle, when that's the case, it tends to break below. But here, when you've got this, it tends to go back up, and that's what happened in this particular case. Did you get out and then go straight back in? Did you do that?
No, I didn't do that.
That's a shame. So somebody who wouldn't have seen this and maybe wasn't in this, and they would have seen this for the first time, like our graduates, might have gotten into that, right?
Might have, but I didn't really get the ratios on this one.
Didn't get the ratios.
Yeah, you have some pretty nasty spikes below. So if I were to enter this, I would have taken. I wanted it to go a bit lower, so I was looking for it actually.
Got it.
But I wanted it to go a little bit lower to be on the safe side.
So what we learned there is that just because we get out at a certain point, that doesn't mean we automatically jump back in on that certain point when there is an opportunity to get in at a lower, better price, which is obviously what we want to do. Okay?
Could be because sometimes this is what a lot of people do. They chase the market.
Yeah.
So, this looks like a great opportunity. They maybe don't have the right risk reward, so risking a little bit too much.
Yeah. So don't think that, but you missed the trade. It doesn't matter. There are thousands of other trades for us to do. We, like you say, never chase the market. Yes, it did go up. And now, in retrospect, we could go, look, we could have gotten in here. But that's just afterwards, 2020 vision afterwards. You're right. We would have lowered this according to our rules, gotten in at the best possible price, because that's where we want to get in. So what happened after that?
So now it actually continued up. So it was a good decision. Well, it went down a bit, but now it's on its journey up again to the resistance.
So here we are right here, right now, and I'm guessing here that we are looking in our next trade to do exactly the same thing as we did there, which is to press that button number 3. There are only 4 buttons. Button number 3, which is the selling short button, which gets everybody so upset, but it's basically the one where we make money going down, and it could go up there in a few days, Dennis.
Yeah, absolutely. So we are watching this closely. We have put it in our watch list, and if it goes up again, we'll take another shot at it.
That's fantastic. What kind of percentages did you make there going down?
So we made we can look at the percentage actually on this particular stock.
Mm-hmm.
So if we look at it from around the entry area. So this was around, let's see where we go. All right, so around 9%.
Okay. But this is very important. Don't let people fool you with 9%, because we didn't make 9% on our entire portfolio.
2.6.
Right, so 2.6% on your entire portfolio. Okay, that's really important to understand that. Yes, it went down 9%, but because of the amount of money that we put in with our risk-reward ratio, we made just under 3% on our entire portfolio, which That's good.
It's absolutely. I can have 1 million of those. That's all right.
Yeah, and in one trade you make 3 times more than you get in a bank. And so when people say, you know, oh, you can't make 3% a month, well, we just made it on one trade.
Yeah, and this was like in 2 weeks, right?
Right.
People make in a year less than that. They
Yeah.
make in 2 weeks.
That's right.
So,
Yeah, crazy. Obviously, you need to learn what to do, right? It's not just like you can snap your fingers. And this is what people do. They think, oh, and they open up an account and they think they're going to be master traders. Well, you have to practice, just like becoming a dentist, or, well, it doesn't take that long, actually. About 4 months. It doesn't take... I think it takes a little bit longer to become a dentist, but yeah, so you can do this as well. That's fantastic. So there you go, Penske Automotive. So we're looking to get back in. Remember, this is not a recommendation. This is actually something that we are doing here in our trading room in London. So thank you to Dennis. Oh, you're going to shake my hand? Yeah, thank you for Dennis. And we look forward to seeing you at the next Charts of the Week.